How can you tell if a price increase is real and not a trap? Or if a decline is already running out of steam? The answer is simple. Look at the delta, the difference between buying and selling volumes. Today we are going to share our ranking of delta-based indicators. We will go over the detailed settings, patterns, and some real examples of trading setups. Stay with us and level up your volume analysis skills. First place goes to the Cumulative Volume Delta, or CVD. Why is it in first place? CVD is the most reliable way to see who is controlling the market overall. It's the foundation of volume analysis. It shows the overall trend of pressure and the sentiment of market participants. If you want to understand not just where the price is going, but why it's going there, this indicator is for you. How does the indicator work? CVD sums up the difference between buy and sell volumes for each candle and accumulates it over time. When buyers dominate, the CVD line moves upward. When sellers are more active, the line goes down. The CVD chart shows the market sentiment within the price movement. Sometimes the price goes up while the CVD goes down. This is a signal of hidden buyer weakness and a possible reversal. Key settings. Visualization mode. Choose a suitable indicator display style on the chart. Simply select the one you prefer. Session mode. Session calculation mode. You can calculate the delta from the start of the chart, reset it at the end of each trading session, or set your own session start time. Colors and alerts. Customize the visuals to your liking and enable notifications for important signals. How is it useful for a trader? CVD helps you understand whether a move is supported by sellers or buyers, or if it's just an empty price spike. It allows you to identify divergences, when the price goes up but CVD falls, and vice versa, to see shifts in the dominant side in the market, and the moment control passes from buyers to sellers. It helps improve entry points by confirming impulses with volume, not just candlestick analysis. Pattern cheat sheet. Price rising, CVD rising, the move is confirmed by buyers. This is the normal market state during an uptrend when initiative is pushing the price. Price rising, CVD falling. This signals weakening buying, and a reversal is possible. This is a sign of increasing selling pressure, which is balancing out the buying and selling forces. Price falling, CVD falling. This downtrend is confirmed by sellers, a logical event when sellers are dominant. Price falling, CVD rising. This is a divergence, a possible upward bounce as aggressive buyers are becoming more active and preventing the price from falling. When might the indicator not be suitable? CVD does not show local patterns, and during sharp movements, it may indicate a shift in balance only after the move has already occurred. However, this is offset by its reliability in identifying the overall trend. Who is this indicator for? For swing traders and intraday traders in most situations. Tip: combine CVD with volume profile or candle delta. This will give you a more complete picture of participant strength, help you find additional trading levels, and provide extra entry points. Second place goes to average delta. Why is it in second place? Average delta is a good filter for assessing trend strength and spotting divergences. It filters out market noise and shows who is systematically dominating at the moment, buyers or sellers. How does the indicator work? Each candle on the chart is the result of a battle between buyers and sellers. Delta shows who was more active, how much volume went through market buys versus market sells. Average delta takes these delta values and smooths them out, showing the average direction of activity over the selected period. If the average delta is rising, buying pressure in the market is increasing. If it's falling, sellers are taking the initiative. On the chart, the indicator appears as a histogram below the price. Green bars represent positive delta, and red bars represent negative delta. The main settings. The period. Over how many candles the average delta is calculated. The larger the period, the smoother the line, and the more focus there is on the overall trend. A shorter period makes it more sensitive to current fluctuations. Calculation mode. The type of moving average, MA. Simple, equal weight to all bars. Or EMA, reacts more strongly to recent changes. If you're an intraday trader and want to see the latest shifts, choose EMA. For calm overall trend analysis, simple MA is suitable. Colors. Customize your own colors for positive and negative values. The average delta helps you better understand whether growth is supported by buying volume, spot early signs of weakening momentum, and filter out false breakouts when the price moves up, but the delta remains negative. This tool lets you look beyond the candles to see not just the movement, but the motives of market participants. Pattern cheat sheet. Rising delta as price rises. Buyers are confirming the move. The trend is strong, price rising, delta falling. Bulls are running out of steam, a pullback is possible. Price falling, delta rising. This is a divergence. Sellers are losing strength. Delta fluctuates around zero. The market is in balance, expect consolidation. When might this indicator not be suitable? Average delta does not provide highly precise entry signals and may be less effective or unreliable on low liquidity assets. It shows the overall balance of forces, not specific peak impulses, although with low period values it can show local patterns. Who is it suitable for? For intraday traders and swing traders who work with trends. Tip: average delta acts as a compass for participant activity. It doesn't say buy or sell, but shows which way the wind is blowing right now. Third place goes to delta-colored candles. Delta-colored candles is a universal, visual, and immediately understandable tool. It literally colors the market with the emotions of buyers and sellers, brings charts to life, and helps you feel the rhythm of the market. Suitable for all traders, especially visual learners. How does the indicator work? It analyzes the delta of each candle, then calculates the total delta over a selected period, for example, the last 14 candles, and colors the chart depending on the strength and magnitude of the delta. If buyers dominate, candles turn green. The stronger the imbalance, the more intense the color. If sellers are more active, the candles are colored in shades of red. Neutral areas, dark or gray tone. You will literally see where the market is breathing with buying and where with selling. Main settings. Period. Number of recent candles for total delta calculation. Larger value equals smoother picture. Short period equals sharp changes. Maximum delta, the upper limit for color saturation. This is the delta power scale. If the value is set too low, the chart will be very contrasting. If it's set too high, the colors will become noticeably faded. And the color scheme. Choose a coloring approach that best suits your needs. There is a standard scheme from red to green. It helps you intuitively see where selling pressure shifts to buying activity. And there are other schemes to choose from. How is the delta-colored candles indicator useful for a trader? It helps to identify specific areas where buyer or seller interest is noticeably increasing, help confirm signals from other volume indicators, such as the average delta, understand whether a movement is indeed supported by real volume or is just noise, and analyze shifts in the balance of power within a trend. For example, if after a series of green candles you see a gradual shift to darker and red shades, it's a signal that buyers are losing momentum and the market is ready for a correction. Color cheat sheet. Bright green means strong buyer pressure, and the upward impulse is confirmed by volume. Bright red means sellers are dominating, and a further decline is possible. Dark or gray indicates balance and low activity. Watch for volumes breaking out of equilibrium. A shift from red to green signals a change in initiative and a potential upward reversal. And a shift from green to red means buyers are weakening and a possible downward reversal. When might the indicator not be suitable? This is a visual indicator of volume flow, so it doesn't show specific entry points, just like the previous two. It only provides context. It may be somewhat redundant or unnecessary for scalpers who focus on clusters or tick delta. And on thin or illiquid markets, the coloring effect will be weak. It is especially suitable for day and swing traders, for those who are visual. Fourth place goes to delta strength, an instrument that shows moments when one side of the market has almost completely taken control. Imagine, you don't just see price movement, but the force behind it. When buyers or sellers in the market behave in the most aggressive manner possible, they end up pushing the opposing side out of the market. Delta strength is a tool that identifies candles where the imbalance between buying and selling activity reaches extremely high values, usually ranging from 90 to 100%. This means that, in most cases, almost the entire trading volume on that particular candle was concentrated on just one side of the market. When sellers are pushing aggressively, you'll see a red dot above the candle. This is a signal of strong bearish pressure. When buyers attack the market, a blue dot will appear below the candle, a sign of bullish momentum. The main settings are as follows. The filter thresholds are the minimum and maximum values, by default 90 and 98%. These are your gates for filtering signals. The narrower the range you choose, the stricter the selection becomes, and the fewer dots you'll see on the chart. By widening the range to, for example, 80 or 70%, you'll get more signals overall, but they will generally be less clean. Candle direction filters. This is where the real magic of the indicator lies. For positive and negative delta, you can separately select all candles, show dots regardless of candle color, only bullish or only bearish ones. This allows you to look for divergences. For example, the candle is rising, but the delta is strongly negative. This means that major players in the market are selling into this rise, preparing for a reversal. How is this beneficial for a trader? Delta strength helps identify accumulation and distribution zones, find reversal points, confirm breakouts, and filter out false moves. A helpful reference guide for patterns. Pattern 1. Hidden accumulation. The price is moving sideways or gradually falling, green dots appear above the candles, and buyers are building up positions before a rise. Pattern 2. Bearish divergence or bullish divergence. The price is rising, but a red dot has appeared above a bullish candle. Sellers are attacking during the rise. A reversal downward is possible. Or the price is falling, but there's a green dot below a bearish candle. Buyers are defending the level. A rebound is being prepared. Pattern 3. Confirmed breakout. A breakout, a level, plus a corresponding growth indicator, dot. Notably, this movement is supported by aggressive volume. It is likely to continue. And Pattern 4. Trend exhaustion. A series of dots of the same color becomes less frequent as the trend continues. The momentum weakens, so get ready for a reversal or correction, when the indicator might not always be suitable. In particular, delta strength is not a universal solution, especially for low liquidity instruments or, for example, for long-term investing. Who is it suitable for? For intraday traders and scalpers who actively trade on highly liquid markets, such as futures, cryptocurrencies, and actively traded stocks. Tip: do not chase every single dot or signal that appears on the chart. In most cases, these are not actual entry signals, but rather subtle hints about the ongoing balance of power. Combine delta strength with established support and resistance levels, as well as with other delta-based indicators, for a more complete and comprehensive picture. Fifth place, delta turnaround. Delta turnaround is an exceptional counter-trend tool for spotting reversals. It's a simple visual way to catch the moment when the initiative shifts, when buying pressure is replaced by selling pressure, or vice versa. How does the indicator work? Delta turnaround tracks changes in delta direction and uses arrows to indicate potential reversal points. If 2 consecutive candles had a positive delta, meaning buyers were active, and the next candle closes with a negative delta, a red arrow appears above. A downward reversal is possible. If 2 consecutive candles had a negative delta, and the next candle closes with a positive delta, a green arrow appears below, indicating a possible upward reversal. Delta turnaround is a minimalist indicator. Its strength lies in its simplicity. The main settings relate to the alert system, which ensures you won't miss an important signal, and to color customization. Delta turnaround patterns help traders identify moments when buyers are losing strength after a prolonged rally, or conversely for selling, to spot points of seller exhaustion after a decline. These patterns also help confirm signals from other volume indicators, such as CVD, and help find entry points at reversals, especially when volume supports a change in direction. When might the indicator not be suitable? Delta turnaround is a counter-trend analysis tool, so as a result, it may not be suitable for scalpers who trade on impulses and do not wait for confirmation signals. It will not be effective during strong trending movements without signs of a reversal. Arrows may appear prematurely. It does not replace delta or volume analysis, it only complements them. Who is it suitable for? For intraday traders and also for traders who are looking for counter-trend strategies. Final recommendations. For beginners, start with delta-colored candles and CVD. This will help you learn to visually assess the market and understand the overall balance of power. For experienced traders, combine these important indicators. Use the Cumulative Volume Delta, CVD, to gain a clearer understanding of the overall global trend, delta strength to confirm and validate the strength of the current impulse, average delta to thoroughly assess the trend's ongoing stability, and delta turnaround to help identify potential reversal points. The best combinations are as follows. For trend trading, CVD together with average delta and delta strength. For counter-trend trading, use delta turnaround in combination with CVD and delta-colored candles. For a comprehensive and in-depth analysis, it is recommended to use all 5 indicators together for the most complete picture. Remember, delta indicators do not replace a strategy. They enhance the context for decision-making. Use them as helpful tools for confirmation purposes.